It wasn't even clear that there was going to be a budget. But in the end, the political timetable and the weather collided, and now we have a budget coming on the 25th of March. The budget's going to take place in the context of considerable global uncertainty. But there are some key themes that we can be sure of as shaping the budget outcomes. First, on the domestic front, growth is picking up as the Australian consumer recovers. The consumer's been through a period of incredible income squeeze. But as inflation's declined and as tax cuts have come through, households have got a little bit more elbow room and an increase in real incomes that's supporting a pickup in spending. And so the outlook for overall growth is a little bit stronger than it has been over the last year or so, even though population growth is turning down. Second, around the world, we're seeing a real lift in government spending. It's taking different shapes in different countries, but all of it is putting upward pressure on government bond issuance globally and therefore global bond yields. In the United States, the federal government is running a deficit of more than 5% of GDP, even though the economy is actually growing at a reasonable clip. We don't expect that some of the efforts to cut spending in the US will materially change that story. Meanwhile, in Europe and in Canada, we're seeing a renewed interest in lifting defence spending as the geopolitical landscape changes. And this is going to increase government spending in those economies as well. Thirdly, in Australia, we're also seeing an expansion in the public sector, but it's taking a different shape than what we're seeing abroad. The care economy is expanding, partly financed by government subsidies for aged care and childcare, as well as the ramp up in the NDIS. The difference in Australia is that this is mostly tax funded rather than funded by larger deficits and thus increased bond issuance. While the government does expect to run a deficit in the current financial year and forthcoming years, these are much smaller as a share of GDP than we're seeing in many other countries and expect to see in countries such as the US. Indeed, the tax take in Australia has ramped up considerably over recent years, even allowing for the stage 3 tax cuts that occurred in July. With the impending federal election, it wasn't even clear that there was going to be a budget this month. So a number of measures have already been announced ahead of budget night. These include support for the rebuilding after Cyclone Alfred, as well as support for the Australian steel and aluminium industries, given the US government's decision to tariff those commodities globally. We've also seen $8.5 billion of additional support for Medicare, student debt forgiveness, and some additional initiatives on transport and internet infrastructure. So what can we expect to be announced on the night? The first thing we expect is some targeted cost of living measures. Electricity rebates are already an important factor holding down retail electricity prices. And with default market offers likely to rise anywhere between 2 and 9% depending on where you live in July, we expect an extension of some of that cost of living support. We're also expecting some more announcements for an expansion of the Future Made in Australia initiative. And another thing we're expecting is a bit of an upside revenue surprise. The economy has been a little bit stronger, particularly the labour market, than what had been assumed in the original budget and in the mid-year economic and financial statements. And so we expect tax revenues to be a bit higher than what had previously been forecast. We also know that with iron ore prices staying higher than is assumed in the budget papers and the Australian dollar depreciating against the US dollar, that there will be additional corporate tax revenue coming from the mining industry. The monthly data on government spending and receipts also points to a smaller deficit than what the government had previously been expecting. All of this and more will be in Westpac Economics' comprehensive analysis of the budget measures, in the note that we'll release on the night, and in the videos that we'll be releasing on Wednesday. So look out for those.
The content of this recording is informational and of general nature only, and is not intended to constitute a research report or reflect any recommendation or financial advice. It has been prepared without taking into account your objectives, financial situation, or needs, and investment decisions should not be based on it. You should obtain your own independent advice before proceeding with any investment decision. Whilst every effort has been taken to ensure that the contents are correct and any opinions, forecasts, conclusions are reasonably held based on information at the date of recording, Westpac does not make any representation or warranty as to the accuracy or completeness of the statements or information contained in this recording, and any liability therefore is expressly disclaimed to the extent permitted by law. None of the material included in this recording should be copied, published, or reproduced in whole or in part without the prior written permission of Westpac.